Hey everyone, welcome to Alpha Insights. I'm Brittany, bringing you the trending market stories with energy. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
And I'm Adam. Nice to be here. We've got a neat follow-up to talk about today on dividend stocks and how a previous screen actually played out.
Right, so quick setup. About a year after someone highlighted 3 dividend aristocrats as undervalued, a follow-up checked how those picks did. The short version is all 3 finished the next 12 months with positive returns, and 2 of them did so by wide margins.
Yeah, that's a good point. The companies named in that original piece were Northwestern, Archer Daniels Midland, and PepsiCo. All 3 rose over the year after being flagged.
Exactly. And the follow-up wasn't trying to redo valuation math. It was more of an outcome audit. Basically, did that screening process for undervalued dividend aristocrats produce real results? In this case, the answer was yes, at least over that 12-month window.
Which matters, especially for income-focused investors. Dividend aristocrats are companies with long histories of raising payouts, so a value screen that points to the ones trading cheaply is interesting if your priority is steady income.
So, the real question here is what you actually do with that info. The follow-up also introduced 3 new dividend aristocrat candidates for this year, names to add to a watch list rather than instant calls to action.
I mean, when you look at the data, outcome reviews are useful because they show whether a process worked historically. But past positive returns don't guarantee the same thing going forward. Market conditions change. Inflation, rates, you name it.
Right.
A couple of practical takeaways from the follow-up. First, screening for undervaluation among long-running dividend payers identified winners over that 12-month span. Second, the author ran the same lens again to surface 3 fresh picks for this year, which gives you a short list to research.
Honestly, I was a bit surprised by how clean the outcome was. All 3 positive and 2 by substantial margins. That kind of result lends some credibility to the original screening criteria, at least in that market backdrop.
But we should flag the main risks. Dividend risk is real. Even long-time payers can cut or suspend payouts if earnings or cash flow deteriorate. Then there's valuation reversal. Stocks that rallied after being labeled undervalued could mean revert. And finally, these companies can be sensitive to interest rate moves and macro slowdowns.
Let's break that down a bit so listeners can use it. Dividend sustainability often comes down to payout ratio and free cash flow coverage. Look at how much of a company's earnings or cash flow is going to the dividend and whether operating cash flow supports that level consistently.
Right. Also keep an eye on margin trends. If a company is seeing shrinking profits, even a modest payout ratio can become a problem fast. So upcoming quarterly earnings are a key catalyst to watch for the new picks.
Short reaction, right.
For traders, these follow-up names can act as catalysts. News-driven moves around earnings or dividend announcements. For long-term income buyers, treat the new selections as a starting watch list. Dig into payout ratios, balance sheets, and how the business is positioned against interest rate swings.
And practically speaking, the follow-up gives you 3 concrete action items. 1. Add the new names to a watch list. 2. Monitor upcoming quarterly reports and dividend statements. And 3. Track macro indicators like inflation and central bank guidance that shift the yield landscape.
Short and sweet. Remember, outcome reviews are informative but not prescriptive. They give you data to feed into your research process, not a single answer to rely on.
So, bottom line, the original screen identified 3 dividend aristocrats that went up over the following year, 2 by wide margins. And the author is now pointing to 3 fresh aristocrat candidates to investigate. Treat those names as a watch list and verify dividend safety and valuation before making any moves.
Yep, and if you're tracking this stuff, watch earnings, dividend announcements, and macro signals closely. They'll tell you whether the new picks can protect income or outperform.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything, and we'll answer live. And while you're there, check out more market content.
Thanks for listening. We'll see you next time on Alpha Insights.